Well, good morning. I'm Jayendra Rana. And the topic of the day is Nat-Cat insurance scheme in India. Nat-Cat insurance scheme in India. With the increasing incidence of calamities such as floods, cyclones, and incessant rainfall in India every year, policymakers must think beyond existing disaster funds and develop an alternative risk mitigation framework, possibly through the PPP model. Conducts impactful policy research and drive policy transformation. India currently does not have a natural disaster insurance program. However, the country has several climate change adaptation strategies for the agriculture sector, such as the government-backed crop insurance scheme, Pradhan Mantri Fasal Bima Yojana, the weather-based crop insurance scheme, and the coconut palm insurance scheme. So the two partners in a commentary published in the Commune, a news and opinion website focusing on social and political issues in southern India, says that a research report published by the State Bank of India in 2023 suggested that the estimated economic loss due to the floods in India ranges somewhere between rupees 100 billion and rupees 150 billion, of which only around 8% was covered by insurance. This year, losses in Andhra Pradesh due to floods are estimated to rupees 68.8 billion, whereas the figures for Telangana are estimated to be rupees 103 billion. So with Gujarat, Tripura, Kerala, Assam and other flood affected states combined, this year's total losses are expected to surpass last year's. At present, disaster aid is provided through the National Disaster Relief Management Fund, that is called NDRMF. The State Disaster Relief Management Fund, National Disaster Relief Management Fund and the State Disaster Relief Management Fund. In both funds, 80% of the allocation is for disaster response and the remaining 20% is for disaster mitigation. So the total fund released from the combined accounts of SDRMF and NDRMF in the fiscal year ended 31st March 2024 was rupees 202.89 billion. So developing a financial risk mitigation model for weather catastrophes would be a step towards climate change adaptation, its initiatives and achieving India's net zero carbon emission target by 2070. So one option for India to develop such a model is establishing a parametric index-based insurance scheme. Another option for policymakers would be to develop a regional catastrophe pool for states facing similar kinds of calamities every year. So following either strategy would require the government to undertake thorough groundwork, update granular data on whether the weather and geographic conditions, and use a scientific method to underwrite risk and estimate loss from catastrophe for geography. Most importantly, this would ensure better coordination between the center and the state. Because frequent natural catastrophic events such as the heavy rainfall at the northern India and cyclone Biparjo hitting Gujarat and Rajasthan will challenge Indian property insurance profitability. So the Indian property insurance industry's loss ratio is set to remain high at 75.2% in 2023 and is projected to rise further to an average of 76.8% between 2023 and 2027. Inflation and increased claim due to more frequent natural catastrophes will keep insurer profitability in jeopardy. Recent floods in North India will lead insurers to reevaluate risk and raise property insurance rates. So initial figures put losses from the North India floods at around rupees 150 billion, that is $1.9 billion, and the Biparjoy cyclones damage at rupees 10.1 billion, that is $126 million. So consequently, payouts for both events are anticipated to be substantial. However, there is a silver lining. Despite these challenges, the property insurance industry in India is forecast to grow over the next 5 years, supported by new product launches and favorable regulatory developments. So the property insurance industry is expected to grow a compound annual growth rate, that is CAGR, of 10.9% from INR 710.4 billion, that is 9.1 billion in 2023, to 1,075 billion in 2027 in terms of gross written premium. Agriculture insurance, a significant contributor to property insurance premium in India, is expected to represent 49.3% of such premium in 2023. So the introduction of parametric insurance products such as Saral Krishi Bima and other upcoming offerings by the Agriculture Insurance Company of India will also expand agriculture insurance coverage. Premium from parametric products will help mitigate losses due to frequent catastrophic events. AIC's license extension to include livestock, aquaculture and sericulture industries will foster 11.5% CAGR growth for agriculture insurance from 23 to 27. Fire and natural hazard insurance will make up 44.1% of property insurance premiums in 2023, with the sector projected to grow at a 10.8% CAGR between 2023 and 2027, attributable to recent regulatory changes enhancing market practices. The construction and engineering, on the other hand, will contribute the remaining 6.7% property insurance premium in 2023. So in April, IRD abolished the burning cost measures for fire insurance premiums, a development that is expected to reduce premium prices, rendering fire insurance more affordable. The IRDI also implemented fire insurance policies based on policyholders' claim history for precise pricing. These changes will enhance customer confidence and sustain property insurance growth. Extreme weather events are expected to remain a major pain point for property insurers, prompting them to increase prices to maintain profitability. Insurers are likely to engage in alternate propositions such as parametric insurance and risk-based premium pricing to offset their exposures. Now, extreme weather poses one of the most significant risks in light of climate change and global warming. This has a direct impact on the insurance property, as the frequency and severity of weather events such as storms, tempests, floods, and inundations have increased significantly recently. Consider this, as TFI rates for property catastrophe insurance have risen by 20 to 22% from December 15 to 2023. The earlier revision occurred on April 1, 2023, when rates were hiked by 25%, resulting in a cumulative jump of up to 50% within 9 months. So the rates for reinsurance on property catastrophe insurance have significantly increased due to the rise in extreme weather events. Whether it's a flood, storm, or wildfire, these perils are occurring more frequently and causing greater damage. So naturally, with higher probabilities and increased damages, reinsurance rates have risen, impacting insurance market rates globally. So notably, STFI rates in India are not determined by the free market but are set by insurers. Thus, rates for the upcoming renewal season, typically due in April 2024, were expected higher and they applied higher. So there are two forces working on the Indian market. Indian markets need to be understood in a different way. One is that rate rise on the STFI, which is a prescribed rate, has gone up. On the other hand, on the other coverage such as fire, machinery breakdown, there is not more free market being encouraged by the regulator on pricing of the products. So the insurance regulator has been very progressive, very pro policyholder, and they have been seeking more competition from insurers on price discovery in the last couple of years, and that has brought down the rates on other aspects of the coverage. So the weighted average increase has been moderate or sometimes even lesser weight wise. Furthermore, each customer's rate is unique depending on factors such as asset type and risk management practices. Hence, there is no one size fits all approach. However, the overall market trend has seen an increase, and the outcomes will be observed largely during the upcoming April renewal season. So, climate change is a growing concern globally, including in India. Between 2001 and 2021, we have witnessed over 350 natural catastrophes, Nat-Cats, that is. So, in the country, so floods, cyclones, landslides, and other natural disasters are becoming more frequent and widespread. The protection gap between insured losses and economic losses exceeds 90%, highlighting the urgent need for a nationwide parametric insurance scheme. So, insurers, governments, and regulatory bodies must collaborate closely to make this scheme a reality, bridging the protection gap and aiding citizens in rebuilding their lives swiftly after a Nat-Cat event. So while the industry already offers covers like crop, property, and motor insurance against natural disasters, the wide protection gap necessitates efforts to bring more Indians under the insurance umbrella. Insurance umbrella. Because with the increasing incidence of calamities such as floods, cyclones, and incessant rainfall in India every year, policymakers must think beyond existing disaster funds and develop an alternative risk mitigation framework, possibly through the PPP model. At present, disaster aid is provided through the NDRMF and SDRMF. So in both funds, 80% of the allocation is for disaster response and the remaining 20% is for disaster mitigation. So the total fund released from the combined account of SDRMF and NDRMF in the fiscal year ended 31st March 2024 was rupees 202 and 89 billion. Developing a financial risk mitigation model for weather catastrophes would be a step towards climate change adaptation initiatives and achieving India's net zero carbon emission target by 2070. One option for India to develop such a model is establishing a parametric index-based insurance scheme. Another option for policymakers would be to develop a regional catastrophe pool for states facing similar kinds for calamities every year. Following either strategy would require the government to undertake thorough groundwork, update granular data and weather and geographic conditions, and use a scientific method to underwrite risk and estimate loss from a catastrophe geography. Because the natural calamities will keep on increasing every year. Maybe the flood or the drought or cyclone or tempest. So these losses will keep on increasing. Unless there is a scheme, neither the government nor the people are going to be benefited. So it is always better to have a scheme to cover these kind of losses, natural calamities, because insurance industry should be prepared to experience total annual insured losses from natural catastrophes and crop of well more than $151 billion on average. On an average. And the increase in this kind of losses is a routine every year. Every year the amount as well as the incidents both are increasing. So the total economic losses from Nat-Cat in 2023 will rise again in the next year. It's no surprise most of the countries which rank the risk of natural catastrophe and the related perils of climate change, the highest are those that sustain some of the most significant events of the year. The increasing influence of changing climate conditions boosted the development of certain events in 2023, and Nat-Cat is now the cause of business interruption businesses fear the most after the cyber incidents. So 2023 is believed to be the hottest year on record, with heat waves or droughts affecting areas of the country. This was the earlier year was the previous year was the year of deadly flooding disasters also. So Nat-Cat events, popularly those related to weather and climates, are expected to increase, and therefore they will have an impact on the insurance industry, from model updates to pricing and underwriting strategies. Thank you very much.